This is your LMAX Exchange technical update for Wednesday, October 18th, 2017. Euro dollar. So the euro is showing signs of the possibility of carving out a head and shoulders top, a major head and shoulders top on the daily chart after already triggering a head and shoulders top several days back off the plus 2.5-year high, just shy of 120.93. Remember, the market broke down below the 118.25 area, triggering that head and shoulders top, which has yet to reach its objective, which comes in at 115.55. But this latest downside pressure now suggests the possibility of a bigger head and shoulders top. And if we take out the neckline, which comes in at 116.63, let's call it 116.60 by that low from early August, then this opens the door for a more significant downside extension towards the measured move extension off this head and shoulders all the way down at 112.30. If we had seen the neckline at 116.60 and we consider the head, which comes in around 120.90, well, we're looking at a 430-point move, and so 430 points projected to the downside on a break of 116.60 would take us to 112.30. And so this level is a critical level of support at 116.60, which also happens to coincide now roughly with the bottom of the daily Ichimoku cloud, a strong trend indicator. If we break down below there, it suggests the market could be shifting back to the downside. And also the 100-day moving average, which comes in the 116s now. So a lot of support into this level, and it'll be interesting to see how the market responds. If we see a clear break, convincing break, might even look for a daily close below 116.60 or all of these indicators here, then it would open the door for the possibility of a drop down to 12.30. If, on the other hand, the market is unable to establish below 116.60, then it would suggest that this is not going to be a head and shoulders top and more of a bullish consolidation ahead of a continuation of this intense uptrend in 2017. Sterling dollar. So cable is expected to chop around right now in the short term, though overall, medium to longer term, this is a market that has shown signs of a major base in 2016 after breaking out in 2017 above some critical resistance that had capped gains at 27.75. And so while we could see setbacks in this market below recent lows at 30.27, any setbacks are expected to be very well supported in the 130 area, with dips limited below that figure in favor of an eventual push back to the top side and through the 2017 high up around 136.60, exposing a push beyond 140. Dollar yen. Dollar yen isn't certain what it wants to do right now. Market has been confined to some choppy trade. The top of a range that is defying trade this year comes in around 114.50, while the bottom end of that range comes in around the 108 area. And so while we're trading at 112, it doesn't give us any clear indication. If we do trade up to 114.50 towards the range highs, then the market could stall out. If, on the other hand, the market rolls back over below 111, which was some previous resistance, then it could open the door for a retest of the range lows. But right now, dollar yen is neither here nor there. Euro Swiss. Euro Swiss not doing much over the past several weeks, but this follows a very constructive move for Euro Swiss, with the market pushing back above 110 and then 112 this year, some key resistance levels to suggest that we're seeing a significant bottom here on a longer term basis, eventually leading to a push beyond the recent highs from 2017 at 116.24 and towards that major previous psychological barrier that had supported the market so well back in 2015 and before then, before breaking down in January 2015 at 120. Aussie dollar. So Aussie, as you can see here, we expected the market to bounce a little bit, but the market should ultimately roll over, doing so earlier than expected. But the analysis is that the market should have been well capped ahead of 80 in favor of a continuation of weakness following the recent breakdown that we had seen below some support around 78, and this exposes the next major drop into the 75 area. We would need to take out that most recent low at 77.34 from the other week to strengthen this outlook and accelerate those declines. And again, only back above 80 on a close basis would put the pressure back on the top side and suggest that the market wants to push to new plus 2-year highs. We had seen that plus 2-year high back at 81.26 on the 8th of September. Dollar CAD. So dollar CAD continues to show signs of wanting to push up and extend its correction after the market had been in collapse mode for much of the recent portion of this year, breaking down from 2017 highs all the way up around 140 and trading all the way down towards 120. So this latest correction is only a small correction at this point, and there's certainly room for additional upside back towards initially the August peak, which comes in at 127.80. Kiwi dollar. So Kiwi, just like Aussie, has seen a bounce, but the market is expected to roll over yet again for a lower top. Ideally, we had said below 73, and a break back below 70.56, the recent support there, would confirm and expose a downside extension back towards the 2017 low at 68.18. SPX 500. S&P 500, no signs of reversal just yet, continues to push to fresh record highs. There is some short-term, very short-term support which comes in around 25.40, but ultimately the market does need to establish a daily close back below 24.87. That's the level that we're looking at right now to suggest that the immediate pressure is off the top side. That's the low only from back on the 25th of September. Gold. So gold has pulled back a little bit this week, but overall this is a market that continues to be exceptionally well supported, and so we're looking for another higher low, ideally ahead of 1250, in favor of this next upside extension back towards and beyond the 2017 high at 1357 and through the 2016 peak at 1375 further up.